to that, Parul from Snowball. So Yale just came out with a recent study that suggested to increase your risk-adjusted return, you should invest up to 6% of your portfolio into cryptocurrencies. Here's why. Cryptocurrencies have no correlation with the stock market. They have no correlation with bonds. They have no correlation with gold. They have no correlation with real estate. And so you actually are safer by investing at least a minority of your portfolio into cryptocurrencies. There was a second study that came out which suggested that if you put up to 5% of your portfolio into a portfolio of cryptocurrencies and 55% in stocks and 40% in bonds, you not only lowered the drawdowns, but over a 4-year weighted period of time, you are likely to double your investment. And so this is data that has been accumulated over the last 10 years.
Awesome, thank you.
Well, I would say this is a really exciting time. The market sentiment is quite low given the nature of where token prices are in respect to where they once were. But I wouldn't lose sight of the grandiose perspective, given that if you look at Bitcoin specifically over the last 10 years, over a weighted period, while it's down 70% this year, it's been down 87% and 70% and 43% and 46%, about 12 or 13 times. So corrections are quite normal. And with each one of these corrections, we have a new bottom. And also we're starting to see major institutions like NASDAQ crashing the market by being the security token offering platforms. We're seeing firms like Fidelity that has trillions of dollars of money in circulation now offering a cryptocurrency product. We're seeing Yale and Harvard and many of these institutions have cryptocurrencies as part of their portfolios. So I would say, don't invest in cryptocurrencies. Actually, I'm going to steal this quote from Brock himself. But don't invest in cryptocurrencies, invest in yourself. We're, again, undergoing perhaps the biggest financial revolution of our lifetimes. And I believe cryptocurrencies are here to stay. And if they are, it's in your best interest to become savvy about them and only invest what you're willing to lose or you could afford to lose. If you don't have very many assets, I would invest a minority of your platform. And I would also look at these platforms. I would start by looking at these platforms which are led by institutions. The institutions are creating the strategies so you don't have to, because frankly, in a decentralized market, it is deregulated. And while you can become the expert trader trading every single day, when the market inevitably turns, you will lose your shirt. Right? They say, there's a famous stock market quote that says, bulls make money, bears make money, but pigs get slaughtered. And so, what can we do? Start by investing smart.